Well, happy Monday. It's May 22nd. Want to bring you up to speed with the latest data here in the Austin area. Want to start with this article. This was in the Austin Business Journal late last week. So the Census Bureau has now looked at the population growth over the last year. And right now, for the second year in a row, Georgetown, which is one of our northern suburbs, is still the fastest growing city in the U.S. But not only that, two more of our suburbs made the top four. So three of the four fastest growing cities in the U.S. are all part of the Austin metro area. Georgetown is number one. They are now up to 86,000 people. They grew 14.4% in just 1 year. I want you to think about that for a second. How many schools do you have to build? Roads do you have to build? Sewer lines do you have to build just to grow your town 14% in 1 year? So Georgetown is exploding in growth. There's also a lot of land. It's in the northern area, so we have a lot of land. So that allows home builders and builders to get expansion to happen up there, multifamily as well. Also, Santa Cruz, California was number two. Kyle, which is on the south side of our metro, they're now up to 57,000 people, and they grew almost 11% last year. And then Leander, which is in the northwest, is up to 74,000 people, and they grew again almost 11% last year. So three suburbs right there are in the top four. And I can guarantee you, if I could go farther down that Census Bureau list, I would not be surprised if we see Liberty Hill and Hutto and Bastrop and Buda. A bunch of our other communities would also be fast growing. So I thought that article was really interesting and a good place to start. This is the MLS as of right now. So in the last 7 days, we've had 1,000 new listings. 1,300 of them had to lower their price. And right now we're sitting about 9,300 homes for sale. So again, that's probably putting us somewhere in the 16% of active listings in 1 week reduced their price to try to get activity in the market. We probably have about 900 that are currently pending in the market. And last week we closed about 800 sales. So that just gives you a flavor or pace of the market. Here's a higher level view of data. So this is over the last 12 months. This first chart here on the left is number of active versus sold listings. So the green are the active listings. And you can see this was February, kind of our low mark coming out of the winter. We kept reducing listings. Sellers were pulling properties off the market. And we also had some buyer activity at the beginning of the year that started chewing up some of that inventory. So we kind of hit our low mark in February, maybe around 8,300 homes. We've now slowly been climbing up. We're probably about 9,300 homes right now. Not as big of a range that we normally see in the spring. Usually you get a much bigger bounce. The reason is, though, we have a lot of sellers who probably aren't going to sell this year just based on their low mortgage rates. And we have enough buyer activity just kind of keeping pace, treading water in terms of where the market is right now, which leads us to this second chart. So this is the original price versus the sold price. Okay, so on this middle column is the original price. Back in June of last year, the median price was $578. Now it's down to $525. So that's where homes are listing, which means sellers are starting to realize, hey, I've got to get my price more in line with the market. In terms of the closed price, last June, we were around $535. Now we're at $465. So that's about a $70,000 difference in the median closed price. These are single family sales in the metro. If I look at just the last few months, so here's March, April, and May. March, the median list price was about $530, $900. Now we're about $525. It hasn't changed that much. We've seen it stabilize a little more. We actually saw a bump up from February to March from $499 to $530. And then as inventory builds later in the spring, we've seen that median price just trickle down a little bit. The closed price, again, we closed at $429 in February. So that was kind of, again, still going down. We bumped up the last 3 months in terms of the closed price. So what's happening is as the price of the homes trickles down, the sales price is just coming up to meet it. So we're getting closer to where the median and the closed prices are coming together. That's a sign that we're having a fairly decent spring market. I wouldn't say it's booming or that it's hot. You know, I think if you really aggressively list your house really well, you stage it and everything's perfect, you might have a quick sale. But for most owners, days on market right now is about on average 71 days on the market. So you're looking at 2 months before you get a contract and go under contract with a buyer. So that's the median in the market, is about 2 months to sell a property. So I'm going to bring you back here. This is one thing that could affect the next 2 to 4 weeks. So this is the 30-year fixed rate mortgage as of right now this morning. So the blue line is kind of the statistical average with Mortgage News Daily. The orange line is Freddie Mac. That's their index. So obviously interest rates came down through March. They've kind of hovered in the middle through April and May. Back on May 11th, the average was about 6.5. But look what's happened in the last 2 weeks. The mortgage has spiked up almost 0.5%. It's now up. It's getting a lot closer to 7% again. Why? Well, the debt ceiling debate in DC is the main reason. So with all the instability that we're seeing with that debate, people are starting to realize we're getting really close to that default date. And if they don't figure out a way to settle it, obviously there's more instability in the market. Those that invest in the bond market are hedging and trying to get as much yield as they can, which means they don't want to buy bonds at today's price. They want to get a lower price on that bond. That's what drives the yield up. That yield right there is what affects mortgage rates. So we've seen the mortgage rate itself. Here is the 30-year fixed right now. They're saying it's about 6.9%. If I go back to May 12th, it was 6.5. If I go back to May 10th, it was 6.48. So you're talking at almost a half point on the mortgage rate. Not all buyers are going to catch on to that. If I go back to the beginning of March, it was lower than below 6.4. So you're talking about in 1 month, we've seen, the mortgage rates jump up 0.5%. That's going to put downward pressure on buyers. Some percentage of buyers in the market right now can no longer afford that house that they want. So they're either going to have to lower the houses that they're looking for, or they're going to have to put in lower offers to try to get the same property at the same mortgage payment. So we're going to keep an eye on that. Obviously, pay attention to what's happening in DC because really that is what's driving this debate right now. And why we're seeing mortgage rates go up is because of that debt ceiling debate. But anyways, that's probably the biggest factor, I think, right now that would be impacting the markets, is that kind of silent debate over the interest rates that doesn't have anything to do with activity or price in the market. It's what's going to drive offers and drive what types of offers those buyers are going to put out there. Anyways, hope this is helpful. We're getting really close to June. So we're wrapping up the Austin spring market. We're heading into the summer. Hope you guys enjoy your Memorial Day weekend, and we'll have another video for you next week.